I'm Matt Bouchard with REIT.com here at REITWise 2013, NAREIT's Law, Accounting, and Finance Conference. Joining me is Les Loffman, a partner with Proskauer Rose LLP. So Les, we hear that the Treasury Department is considering proposing changes to bottom loss guarantees of partnerships. Can you explain what the government is considering and how it could impact real estate partnerships?
Well, it will impact real estate partnerships rather dramatically. First of all, a bottom guarantee, just to understand it, if I have a property that's worth $200 and has a liability of $100 on it, and I guarantee $10 of that liability, the bottom, the property would have to decline in value for $190 before I'd ever have to go into my pocket on the guarantee. And we understand, but we're not 100% sure, that the Treasury and the IRS are considering two things. One, with respect to bottom guarantees, they may not allow bottom guarantees to be treated as obligations which are recourse and allocated to the partner who bears the risk of loss with respect to those liabilities. Instead, they'll treat them like non-recourse indebtedness, and they'll allocate it among all the partners, even though that partner has more risk of loss. Also, we are hearing, and again, we're not told that this is accurate yet, that they're only going to allow guarantees to the extent of the fair market value of the assets of the guarantor, which is a whole departure from what we've had over the last period of time. The only time we've had to look at net worth was of disregarded entities. Now, if you're an individual and you make a guarantee, you're going to have to provide a balance sheet if that ever got enacted.
Now, the House Ways and Means Committee recently released a tax reform discussion draft on pass-through entities. Now, how would that affect planning for real estate partnerships?
If these got enacted, this would be a major disaster. I'm not going to go through all the pages, but there are three provisions that jump out at me. The first deals with taking three baskets of income and credits: ordinary income, capital gains, and tax credits. And within those baskets, the government won't allow you to allocate other than by 1%. So that means if you and I form a partnership, but I agree to provide a preferred return on your investment, and every other way we're 50-50, we can't do that and allocate because we're confined to allocating 50-50. That's a really crazy rule. It won't allow people to allocate items of income loss and deduction in a manner which reflects the economic deal that they have engaged in. That's crazy. The next thing is, from now on, they're going to, if this were enacted, whenever you make a distribution to a partner in a partnership, they're going to require withholding. You no longer do that. In fact, today, when you make distributions of cash to a partner, typically the partner doesn't have any gain unless it exceeds his basis in his partnership interest, or it reflects a current distribution of income matched by an allocation of income. And then finally, if a partnership distributes property to a partner, the partnership is going to be required to pick up income attributable to the fair market value in excess of its tax basis at that time.
Lastly, what are the chances in your estimation that large portfolios of real estate currently held privately will become part of the public markets, either through IPOs or M&A?
I would say on industrial grade properties, about 15% of them are in the hands of REITs. REITs could only increase that number and increase in general its acquisition of properties everywhere, because REITs have access to cheap capital. They are growing in size. I can tell you, just to let you know, I mean, we haven't had much merger activity last year apart from the big AMB Prologis merger, but I have been engaged in two public-to-public mergers already, both closing in January. And I suspect there'll be much more this year.
Great. Les, thank you so much for joining us today.
My pleasure.
For more on this and other REIT news and analysis, be sure to visit REIT.com.